Ladies and gentlemen, welcome to Entrepreneurial Finance, treatment of business angels. Let's face that situation. You found a business angel who wants to invest in your company. How do you treat this angel? What are the angels about? Again, what is their behavior? Let's start with an example, Chris Dixon. Chris Dixon actually missed out on Dropbox because the founder didn't entirely convince him. And there you can see what it means, business angel investing, because at the very end, Dropbox got very, very successful. Sequoia financed Dropbox, and Sequoia is always doing good investments. They are also invested in WhatsApp, for example, and they accepted that. And Chris Dixon said no. Is he stupid? Probably not. This is again a reflection of the uncertainty. There is high uncertainty when the Dropbox founder approached Chris Dixon and say, okay, don't you want to invest? There's high uncertainty also when other founders approach you with a new idea. You're an entrepreneur, you're an angel, and they want to convince you to invest. You never know what this is about. You might not know the technology. You might not know the behavior of the entrepreneur and so on. This leads to the point that angel investors need some kind of investment process. And what they normally do of 100% of investment opportunities they have, they do a very brief overview, rapid decision on these 100%, and they only seriously really consider a quarter of it, maybe less nowadays. And then they look into these investments more closely with a more comprehensive analysis and accept a one-digit number of percentage where they invest in. And maybe this percentage is even lower today. So what you can see is you have investors, and after 100% they get, they only seriously consider 25%. The others will be sorted out before. And then they try to understand, especially the management, as Chris Dixon, the management, the founder of Dropbox, in order to get an idea whether this guy is going to make a successful company. This is how it works. And it is not always easy to convince a business angel. You need to build up your business. Would you get funding for this idea? The QR puzzle, for example. QR puzzle for kids, at least 5 years of fun. Well, again, we said angels only invest in 8% or even less of the investment. So for you as an entrepreneur, that might mean you need to get to know 10 to 20 angels before you found the one who's going to invest in your company. They prefer to get involved in very early stages. That's what we said before. You have to bridge the gap between 4F financing and when venture capital comes into place. And they focus a lot, especially on the management team. And we had the example of Chris Dixon. He talked about the founder. The founder didn't convince him. It's not the idea. It's the founder. Therefore, it is important to treat a business angel as sound as possible, and especially important to remember the motivation of business angels, because motivation of business angels is having capital gains, so making more money, but also having fun. And having said that, the angel always looks at the team first. Looks at the team first in two ways. The first way, do I think this team is going to make a successful company? And secondly, do I have fun working with the team? Because they mostly get involved for fun and the desire to support young entrepreneurs, and besides that, for capital gains. And this is how business angels look at entrepreneurial companies, even if you do a comprehensive analysis, because you can never look into a company on a very deep level if you're an angel investor and you are alone and you have to assess a new idea. However, business angels don't invest in ideas that might seem weak, especially management teams that are not trustful, or an industry they don't really know. This is in most cases where they say this is not interesting. So to sum that all up, business angels, if they have a lot of investment opportunities, they need to do a quick check and then a comprehensive analysis. And then in this comprehensive analysis, it is most important that you as the entrepreneur, the management team, convince the angel that it is a good investment and it is fun working with you.